class, and as the title says, Tesla gets shot. How much lower for ARK? So we know that Tesla is the Amazon of the decade, and everybody is actually protecting their dearly beloved Tesla. But when you are seeing Tesla gets shot, then that means that it actually means very huge downside in the markets remaining. So let's go through these things. Professor Richard Feynman said, if you are wrong, admit it. If you are confused, ask questions. If you are stuck, seek for help. If you make a mistake, learn from it. If you learn something, teach others. We are actually going through quite a bearish year. And let's take a look at the ARK ETF. So ARK ETF is actually already here in a white flag zone. If it actually breaks $80, you have a huge downside back to about $60 or even $50. Now, it could actually make a fake breakdown, but I'd say that any rallies to about 88 or 89 would have that downtrend continuously staying intact. And as to what would lead ARK ETF, example, to go from 80 to 60 or 50, which is going to be a 70% sell-off for this year from its peak, then that would, I assume, a lot of ARK ETF names might continue to still get pummeled down, despite the fact that they seem to be hitting this support area. So either 80 breaks or it goes back to about 74, 73, rallies back to 81. There could be whipsaws. We are not discounting whipsaws. Example, this is a whipsaw. You actually go down and then go up, and then eventually it went up. So this is going down, probably could go up. So there could be a lot of volatility here, but we are seeing that a lot of growth investors are surrendering with white flags on how low these things can go. So this is Total Capital. This is a breakout last night. You could see this is the inverse of ARK ETF. A lot of growth investors are actually trying to hedge their positions with a short ARK ETF or a SARK, S-A-R-K. And we are seeing that since December, this just persisted to go lower, higher lows, i.e. if you have higher lows on the Total Capital Short Innovation ETF, what this essentially means is that you have lower highs for your ARK. So the higher this goes, that actually means that your ARK is going back to about what, $60? From about $80 to about $60. That's about 30% further downside. So let's take a look. So we can see that ARK ETF here at about $79 was actually that is the same price here at about July 2020, July to September. And you can see that the all-time high of ARK ETF coincided again with a lot of Forbes magazine indicators, Bloomberg Business Week. We can really tell that the magazine indicator is basically a very good indicator to go contrarian. And unfortunately for everyone, if you recall, Tesla is Time Person of the Year, and we're seeing actually Tesla get shot. One of the biggest potential drops that could happen because ARK Innovation investors are bailing out is actually a sell-off for Tesla. Fund flows are dipping in the last 6 of the last 7 months, and it continues in 2022 unabated. What you're seeing is further redemptions, and it could actually trigger a downside move. Now, notice as well that that the ARK Innovation ETF 40% is actually now below Berkshire Hathaway's 41% ETF, 41% increase since the pandemic, which is about March, which tells you that all the highs, all the premium alphas that ARK ETF has actually happened is actually down to about 40% or just at par with Berkshire Hathaway, which simply owns the likes of Kraft Heinz, simply owns the likes of Apple, lots of dividend names. So a lot of classic story here happening in the markets. The turtle beats the hare. And a lot of people are also using a lot of comparisons. They're actually, this is a funny chart simply because Brent crude oil, if you recall, during the pandemic, fell even negative. Now, of course, for some charts, it didn't go negative. Some crude oil futures was -0. And this is actually $20 here and then rally to as high as 80. You could see that this depicts the recovery of energy demand, aka energy ETF. You're seeing as well ARK Innovation ETF falling. Well, it has actually no correlation, but people are just saying that for the first time, ARK ETF is now actually below crude oil. Crude oil is $84 and ARK ETF is 80. If ARK ETF goes $60 this year, then that's definitively lower than the Brent crude oil. So you could see as well that even in the last 3-4 years, so actually this is your, the blue line is your ARK ETF. And the S&P 500 is the black ETF. which is primarily composed of the Fortune 500 companies, largely the FANGs. And you can see that the QQQs, which are mostly skewed again to the FANGs, it's actually already at par. So assuming you hold for the last 4 years, just Microsoft, Facebook, Google, Netflix, and the likes, just the FANGs, you are of the same course. It's not as volatile as the ARK ETFs, but you could see how fast the mighty has fallen. So from about as high as 320%, it's now about just 160%. Could it fall to about 80%? Now that's the dilemma of many looking at growth stocks today. Now, take a look as well, U.S. Treasury notes, 10-year U.S. Treasury notes. The 10-year U.S. Treasury notes, of course, has fallen simply because of interest rate hikes. So the 10-year Treasury bonds actually fell from about $150 all the way to about $120. And you could see that it tracks very well since March 2020, this entire drop of the ARK ETF, i.e. with higher rates, higher interest rates. People are talking about 4 interest rate hikes by the Fed this year to contain inflation. That is actually depicting a very bad story for a lot of growth stocks, especially those that are not printing dividends. So I took a look, just my personal take on the last 10 years, what exactly happened here. So in the last 10 years, you could see that the strongest ones have been Shopify, 40x actually, although at the peak of Shopify, it hit as high as 64x. Tesla actually is still at 36x. Could 36x deflate all the way to about 20x for the last, let's say, 2014 to 2022? And you can also see that although some names here never existed 10 years ago, C Limited actually listed about 2017, 2018. It's still a 10x, even after a mighty fall from 20x all the way to 10x. Could it go down to 5x? Could Square go from about 9x all the way to 4x, 5x? You can also see that Amazon has caught up. Amazon is still 7x. Will Amazon fall? Tencent is 3x. ARK ETF is about 3x nowadays from inception. JD is 2x. JP Morgan, which is 2x. Zoom is 1.6x. Pinduoduo is 1x. PNG, if you just stayed in a Unilever PNG type of good, it just earns about 5-8% a year, gives you dividends. It's also up 100% over a span of a decade. Notice though that Unity, Palantir, although this is below 100%, take note that Unity and Palantir are growth stocks that actually just existed 2019, 2020, 2021. So actually, some of these are just new names like Zoom. Zoom actually just listed since 2019. So we are seeing growth stocks actually get killed. And I'm just trying to see how far growth stocks could continually fall if they would fall. So why don't we take a look at the charts now individually? This is Tesla. We are seeing the Tesla get shot. The Mr. General Tesla gets shot. 1 2 1 1 74 1 2. We are seeing 4 quadruple lower highs here on Tesla. Could this monster stock become from about 36x to about 18x? So if it falls 50%, that means 1 2 to 600. So that is a fall here about 600. So far, Tesla's showing that it could fall. And we are seeing that the charts are already predicting a drop from about 1,030 initially to about 900 and then 800. Now, if 900 breaks, it's 800. If 800 breaks, it's 600. Of course, we don't fall immediately 50% in a day, but I want you to open up to the downside just in case it falls like that. 1 2 to 600, it's not impossible. You have to put your eyes on the prize. So eyes on the prize, it's possible that if you're looking to buy Tesla, wait 600. If you're looking to short Tesla, now's the time to short it. Now, you can take a look at QQQs. The Qs are actually falling down. We are already seeing since December, we said that FANGs and semiconductors are topish. And that topish was seen here in massive sell calls here at about $400, i.e. that was the NASDAQ nearing 6,500. So at 400, it's already down to about 380, 5% down. Could it fall another 10% down from 380? Yes, the answer is yes. That means your Amazon, your Facebook, your Googles, your Teslas, every name, NVIDIA, AMD, the most beloved names in the FANGs group are also getting shot down here on a drop. Now, actually, a usual drop is 20%. That means 400 minus 60 is 340. So you're still supposed to see Google fall. You're still supposed to see Microsoft fall. Now, this is your semiconductor. We are seeing that topish signs. So if you are still shorting semiconductors could be shorted. Some people are just selling stock sell. So some of us are just shorting stock sell. You could short the shares. You could short it through sell calls. It really doesn't matter how you short. There's only 3 ways for you to short. Short the shares, buy the put, or sell the calls. That's basically it. Now you're seeing as well that semiconductors are getting toppish, and so Nvidia is falling down here. 340, 320, 300, 280. Last night, 265. Sure, it can rally to about 280, but what happens there? Even if it rallies, there are adequately confident shorters here, and they're likely to cover somewhere here about 240 or 230. That's where you cover. Now, some people would short 280, cover 260. Yes, that's also fine, but eventually, the way it looks is that the covering price about 230 or 200. So lots of downsides still coming for the FANGs, and lots of downsides still coming for the Nasdaqs. So AMD, yes, it's a partner of Facebook, but obviously we're seeing AMD fall down from its peak of 160. 160, could it fall to about 125 or $120? The answer is a yes. Any rallies have been lower highs. 160, 155, 150, 140, 130. Could it fall 120, 100? The answer is a yes. I did have, like last night, I still had growth stocks. I had to close it. I had to close it sometimes at a loss. And I actually initiated short positions last night. I do want to continue shorting tonight. Any rallies would be shorted. Now, this is one way for you to actually go leverage on a short. This is just a bears, BERZ. This is a 3 times FANGs and innovation are being short in the FANG, short in the ARK. So it's bears, BERZ. We have said here that it's a bearish year for 2022, and one way that you could really adequately just short this market is just to go long the bears. Again, the ticker symbol is BRZ 17. It's now $20. Could it go 24? That means further downside for your ARK and for your ETF. Be careful out there. It is very bearish. People will still continually short it. Unfortunately, if you are long them, you have to brace the downside. Embrace the downside. Okay, so let's take a look at solar ETFs. So last night, there was also a chance to short Solar Edge and Enphase. I actually shorted Solar Edge. I'd say that even today, it's still another short for Enphase and Solar Edge. So this is the Invesco Solar ETF. You'll notice 96.96, a break of tan here about $70, opens up leeway to about 60, 50, or 40, which means what? Sunrun falls, SunPower falls, CSIQ, any other solar name actually falls. Be careful of the downside. The market is still very bearish. Momentum is still on the downside. The downtrend hasn't been reversing. Therefore, actually, the best performance for any portfolio out here for 2022 would be what? A 100% short portfolio. Unfortunately, if you are long growth stocks, either you should be shorting more, you should be net short. Example, if you are long, say an ARK, you have, let's say you are long one ARK share, whatever that ARK share may be, whether it be Tesla or Square or Zoom or Teladoc or Palantir. This has nothing to do with the fundamentals. In fact, the fundamentals of some of them are actually so damn good. Nonetheless, it doesn't mean that you are fundamentally oriented, that you know it's a 10x name, that it will not get shot down. You saw Shopify 64x to go 30x. If you are okay to lose 50% furthermore, then this slide is not for you. But if you're not okay to lose 20, 30% further, you have to embrace the fact that this is a short market, and therefore you have to continually short and probably save your longs for another day. Sometimes it's really supposed to be like that. So this is Solar Edge. Take a look. Solar Edge to 260. Can it fall to about 200? The answer is yes. I'm looking at companies that I think have huge downside, and there could be some more downside. So this was a double top here at 380. Could it fall to about 180, 190? The answer is a yes. If you are looking to have some short positions on your stock, try to take advantage. Last night, Solar Edge actually had a good news. But what did people do? Every good news is being shorted. Take note as well that Solar Edge has gone from about $20 all the way to $380. Now, I'm not saying that all 10x companies have to deflate 70% down, but the probability for this to fall to about $190 or $200 is very high. Therefore, we give a Solar Edge short, a Tesla a short. Now, Microsoft, the FANGs, a lot of people, beloved Microsoft and Apple, they are never going to sell. Well, they have to learn that Tesla, Apple, Microsoft, these great generals do fall. And they fall also 10%, 20%. 340 falls about $300. Can $300 go to about 280? Could it fall to about 270? The answer is a yes. Netflix has already fallen. We said that about 680 seems to be a top. The Squid Game effect, the fever, it wasn't actually going to have further upside. So 680, 620, 560, it's been continually falling. The nice thing about Netflix, though, is that it has fallen faster than the rest of the FANGs. And therefore, at 520, you may see just another 10% downside. Should be looking somewhere at about 470 to 480 if you are a buyer of Netflix. Just take a look. Netflix is still the dominant streaming. International subscribers is already more than 100 million. Your domestic, aka in America, so it's still about 250 million for Netflix. Um, sorry, your 2021, yes, so it's about more than 250 million subscribers. It's still a strong growth. So we are seeing that the connected TV era is very strong, international, domestic. Disney has a lot of catch up to go. So you're seeing as well HBO Max also doing quite well. Amongst the streaming subscribers, I do have to say that yes, we like Netflix, Disney, and AT&T, which owns HBO Max. And the nice thing about these three is that Disney actually gives you 1% dividend. HBO Max actually gives you 7% dividend, whereas Netflix doesn't pay a single dividend at all. So among these three, why does Netflix not give any dividend? It's because they decided to give all their money to a gaming studio. Take note, Netflix is investing about $3 billion in gaming studios. Whether that does well or not, I think it's adding volatility to the Netflix stock. But do we like Netflix, Disney, and HBO Max? The answer is a yes. But you have to be very careful at what prices you buy. And nowadays, the easiest buys have been any company that just has dividends, whether it be Kraft Heinz, Campbell Soup, or yes, HBO Max. Yes, we do have HBO Max as one of our top picks for 2022. Now, let's take a look at crypto ETFs. You can see that crypto is being shorted, shoot. $24, $23, $21. The thing about these names is that it's kind of good to short them because there's no support, i.e., 16 can go $10 for all you know. I.e., it means that MicroStrategy falls from about 500 all the way to about 300 to about 200. What does that mean? Yes, we are very bearish on crypto. We think crypto is going to go $20,000. And you can see that the designation of cryptocurrency verification process speeds right now, Bitcoin, Ethereum, Litecoin, it really pales almost nothing to Visa and MasterCard. So we do believe that this year, it's the year of Visa and MasterCard. Visa and MasterCard actually gives you about 2% dividends. And 1.7 or 2%, depends on your price. Either way, we do have a buy rating on Visa. If Visa goes $190, it's Visa is currently about 215 today. So if Visa falls 10%, just like when the FANGs get pummeled down, try to be on the lookout for Visa because Visa might be on your picks for this 2022. This is Visa. It's trading at 215. Wait for a $20 drop here at about $190 and you might get an entry. We've always seen Visa to be dependable, supportable, kind of like your turtle against hare story. Visa is actually a funny thing. People consider Visa a turtle, but it's actually not. Visa actually went from about $40 as high as $250, a 6x move, and the dividends actually grew 7x over the span of 10 years. So why does Visa make a ton of money and have tons of cash dividends to give to you? Because they process all your shopping payments in Amazon and any other company that you are buying from, whether it be from Shopify stores and so forth. So it's a worldwide global payment. And as you can see, the transactions in Visa remains unabated even after the pandemic. And so it is a very much huge dividend payer. Put this in your buy list in case you have ideas for 2022. We think Visa is going to outperform 2022. Now we can clearly see Bitcoin. That was a short trap. You can see 44,000. It rallied from about 40,000, but last night negated, rejected. It never even rose to about 48 or 52, which tells us that the intact downtrend on Bitcoin is still there. The next downside is actually 36,000 and then 33,000 and then 30,000. Obviously, you don't know how low it can go. After 30,000, it can even fall about 20,000 or 15,000, but the downtrend is intact. You can clearly see that. It could be sideways. Obviously, 29,000, some people might buy. So we'll have to see about that. But then again, it's very clear when Bitcoin falls, everything else falls. Ethereum, Solana, usually it happens really like that. 100% correlation, usually. Now, because growth stocks are getting killed, you can see that C Limited here, about $200, got killed again last night, about $180. Now, notice that there was a gap down here to about $200 simply because Tencent sold $3 billion stake on C Limited. Now, we haven't seen C Limited break above $200, which might mean that the prior support of $200 is now, unfortunately, the resistance. Now, if $200 is unfortunately the resistance of C Limited, what should you do if you're a big believer, you're a Southeast Asian, you're a Filipino, you actually think, no, 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 they are wrong, C Limited is going to have earnings, etc., etc. Unfortunately, for any growth investor out there, we've seen Alibaba go down from 200 all the way to 110 without the fundamentals really changing at all. In fact, the fundamentals of Alibaba even got better. So I think that C Limited is probably hitting the Alibaba style of drops. And in case it does drop, how low can C Limited go? We have to be objective here, okay? Look at the chart, and you can see that if you break 200, unfortunately, it could either go 160, 140, 120, or 100. So that is the downside that we are looking at. It's actually a guessing game. So what should you do if you have C Limited? Number one thing is probably try to, as much as possible, sell 200 and then buy back if it really is going to go beyond 200. And then actually wait it out, see how low it goes. Is it going to be 150? Is it going to go 140? Is it going to go 120? I wouldn't know. Another thing to do is if you're selling, say, 180, because it doesn't go 200 anymore. Today's 180, 181 pre-markets. In case you, this is the hard thing though, because if C Limited actually bounces from 160, then that's the low. So I mean, so you're seeing today a choppy move for C Limited. There is a bull and bear tug of war. The bulls are believing that C Limited obviously has a huge runway, huge growth, and there's execution. Now, the bears are obviously just talking about the interest rate hikes and just the chart. The bears are really just touting all the charts, lower growth, interest rate hikes, la la la. It could have been any company. You could have been printing so much money, but they would still short you as long as you're a growth stock. So it is true for all. I have to say that this is true for all e-commerce names. So I'm going to show you e-commerce names in case that you want to hedge your position. Well, there are companies that are actually selling down massively. So this is you can see that people are actually shorting Mercado Libre. And in my view, there's probably more downside in Mercado Libre simply because there's more difficulties actually in Brazil, in Latin America, rather than Southeast Asia. So this is, I mean, sometimes you just have to admit na the market's so weak and you have no choice, basically, guys. If it's just gonna fall and fall, either you go down and sink with the ship, or you actually escape and try to short it anyway and actually be the ones winning and sinking the ship further. So that's really the only thing that you could do. So at 2,000, could Melly go down to 1,000? The answer is yes. If it's going to fall 70% down, it's going to fall to as low as 700. So there's really a lot of leeway to fall here. Mercado Libre, if Mercado Libre rates going down, that actually means their C Limited actually gets punished and shot all the way down as well. Unfortunately, what this means is that any rally of C Limited is a short. Okay, so bad news, but that's the news. It is still a bad thing. Square, i.e. Block, no. So Block actually reported last night that they want to have that Bitcoin open mining system, and the thing is, even so, last night was a killing spree for all the ARK names and all the growth names in general. All the growth names were just getting killed left and right. It didn't matter if they had earnings. It didn't matter if they report numbers that example, Block actually just finished and closed the Afterpay acquisition. Actually, it doesn't matter. What the market just wanted was, okay, since the market's going to have 5 interest rate hikes or 6 interest rate hikes or 4 interest rate hikes, that is a more important thing for most people rather than what the company's earnings are. So what we're seeing is still the continuous downtrend momentum here. From 280, it got shot down 50% already to 140. Now, while I don't think it's going to go $70, I do think that the problem here is that if ARK's going to continually get redemption at sell-offs, that might mean that Sir has no choice but, oh my God, can fall to about 120 or $100. So you just have to be open. I'm not saying that the downside is 100% gonna happen. So for other people who would refuse to sell, obviously you just want to cost average it. Like example, if you will just cost average at $100 or $70. Now, it doesn't matter. I do believe that it's going to go back up to $200 eventually. These growth stocks really have the business model to make them go up and recover. So the short term is the bad thing. The long term is still good. The short term is basically, obviously, some people would just they're just waiting. So they're punishing ARK so that they could buy it at 60 or 50 or 40, and then they'll just go long on 40, 50, 60. So basically that's what's happening. Tesla, they want to shoot it down so that they can buy Tesla at about $600 or 700 or 800. That's basically what's happening. So either you short through sell calls. That's one thing. You sell call, you sell ARKs, ARK ETFs at 100 calls, and so forth. So basically that's what's happening. So Roblox, unfortunately, even if December numbers are great, they already said that December numbers are great. Take a look at what's happening with Roblox. Just getting killing fields, 150, 130, 120, 110, all the way to about $80. This might be the only time that Nancy Pelosi is wrong. Nancy Pelosi bought Roblox call options. Looks like she's wrong here. We have a support here at 75 and 65. There could be a reversal come earnings time, but the reversal is going to happen only around March. So between now and March, things can go haywire further. And I'm just speaking from the messages of the charts. Okay, the charts are so bad. Rallies on Roblox at 90 and 100 are going to be shorted like hell because it's just how the markets are. The markets just want to short. The markets have a theme. This year is just bear market, short market, blah blah blah. Now, Unity, same thing happening. You're seeing metaverse tokens go down, and Unity metaverse stocks are falling down, down, down. 210, 180, 150. The next drop is 120. A breakdown of 120 opens to 90. That's like, now you might say, why would it fall $30 drop again? Actually, it doesn't have to be fundamentally oriented already. Yes, we know Unity, Roblox are really good, great companies. But as I said, the charts do not actually have anything to do sometimes with the fundamentals. We're actually already hitting the irrational sell-offs. But I have to say that irrational always gets more irrational in my experience. So is there a 98% chance of hitting Unity to about $90? I think that the confidence interval just shot up to a yes rather than a no, simply because that chart, that bearish candle there, is actually very bearish. A break of 120 actually gives more confidence for the bears to continually short. I am sad to report this, but this is the truth. So people are gonna still kill, Kathy. That's still the mantra for 2022. Now, unfortunately for Zoom Video, no matter if you think that Zoom Video has $1 billion of revenue in this quarter, whereas 2020, it only had $120 million of revenue. That is an 8x in revenue. And Zoom Video is actually trading at 10 times price to sales with actually 80% free cash flows. Nonetheless, because Zoom Video hasn't reported, because Zoom Video is not the type of company who would issue that $5 billion of cash that they have as a dividend, I'm not sure if Zoom Video will ever be treated as a cash flow machine when it really is. So, game video companies like C Limited is actually a cash flow machine with Garena, but it's just that C Limited is using their cash flows of $1 billion to support their C Limited Shopee ventures. And Zoom Video right now actually has $5 billion in cash, and every year they will mint another $5 billion of cash. $4 billion if you have to, for 3-4 billion example. What would Zoom Video do with all its cash? If they want to just be a pathetic company, then they'll just give dividends all year long, like what Procter & Gamble does. But I don't think Zoom Video is the type of company that's a pathetic company. But because they are thinking long term and they're not giving cash dividends, the market's actually punishing these types of names. It's already down 70% here. Is 160 likely to go $80 for Zoom Video? I would be I don't know if I would be ecstatic or sad. I don't know really what to do. Because on one hand, if Zoom Video fell to about $80, I tell you that you are literally buying a company that's like 5 times price to sales with around, at that time it might be 5 times PE ratio already. So it's actually funny that you're able to buy a tech company that's really growing 20-30%, and we're using Zoom every single day. Like, it's not as if like we're not using it. It's not as if like I don't know recurring revenue and SaaS. So like Zoom video is as normal as a Netflix predictable subscription base. Monthly, you're paying a $10, $12 fee. Either way, the market likes to sell down. So obviously, I'm not gonna, sometimes the market can just punish things out of the blue. But this is the happy things. So that's what I'm saying. Either you're happy or you're sad. Happy because, the more they punish Zoom video, the more that it's getting laughable to actually say that Zoom video is a growth stock. Indeed. Because Zoom videos, I don't know if Eric Yen could just laugh and just tell him, hey, I don't know what to do with my $5 billion cash. Are you guys fine if I just give you $2.5 billion of cash dividends? I mean, they could do that if they wish, and then kaboom, the stock will just killed all the bears. I mean, but I don't know if that's something that Eric Yan's gonna do. Either way, Eric Yan, of course, the CEO. Okay, so this is Zoom videos quarterly 2020, the pandemic, prior to the pandemic. Obviously, from $120 million of sales, they now have $1 billion of sales. And in 2023 and 2024, actually, they're gonna have $5 billion and $6 billion of sales. And it's actually expected to go as high as $10 billion someday, if and only if everyone's actually. I don't think there is an unsubscribe rate in Zoom video. So actually, yeah. So just telling you the truth that Zoom video is actually a cash cow, 4, 5, 6 billion dollars worth of revenues. 80% of that is roughly in cash. So it's getting really laughable if you ask me. So actually, I might buy. If you ask me, if I had a choice, let's look 6 months from now. That Zoom is $80 and ARK is $40. I think I'll go 100% Zoom video rather than ARK, because I think like Zoom video is more the wowza name here amongst the bargains happening in the growth land. Okay, so that said, let's take a look as well on the Energy Select Fund. So we're clearly seeing that the market is heavily buying a lot of energy names. When Brent crude oil went up, obviously that was a pandemic reopening recovery theme. The people are going out, or rather, they are not really getting fatal on Omicron or even Delta variant, and so they're kind of like staying lower, higher lows. You're seeing Energy Select Fund $24, $30, $40, $50, $60. So it's already 3x from its lows, nearing 3x, 24 to 63. We do believe, though, that this year, since it's a year of energy, it's a year of dividends, take note that the largest entity in XLE is ExxonMobil, Chevron, British Petroleum, Royal Dutch Shell, all the top big four oil companies, all the gas guzzlers, all the i.e. dirty oil names. And the thing about here is that the world cannot just transition to climate change ASAP. It doesn't take a year. It sometimes takes 10 years to do so. So people are actually reevaluating their positions and weightings on Energy Select. And we are seeing actually last year that shift already from 2021 already showed the shift from 30 to 60. And this year is already just confirming more shifts further, more momentum towards Energy Select sector funds. So I think what's happening here is that the more that they punish for every one Zoom share that they're selling, I believe that what they're doing is they're just rotating towards owning ExxonMobil or owning Chevron, or basically they might not even own the stock per se. They might just be owning Energy Select Fund. So for every name that they punish on ARK name, either they are selling ARK or longing SARK, and then they're going long XLE. I think that's really the momentum move this year, 2022. So you could clearly see energy market cap is still punching way below its earnings potential. Indeed, British Petroleum just reported like 5 billion dividends, $5 billion, I think. So British Petroleum is in London, BP, but it's also listed in New York. So clearly, energy stocks is less than it's still a very huge. It has leeway to go up, basically, simply because you'll see that this year the market has been buying energy and financials, the companies that have been beaten down and hasn't quite recovered since the pandemic. So let's take a look at that. Take a look that for the last 10 years, owning Chevron, you just broke even. 130 is still $130. But what people are saying is that, over the last 10 years, if I held Chevron, I do own 5% dividends. So that's the only thing that Chevron does. It gives you dividends. So if you ask me, well, if I'm gonna own something that is also just at the same price 10 years ago, other than Chevron, again, I'll still say Chevron and HBO Max. Actually, HBO Max today is at all-time 10-year lows. That's why I believe that AT&T is gonna be a better buy, and I do own AT&T. So what I've been doing is, and what I think 2022 year is all about is, since 2022 is the year of the dividends, you do have to continue shorting growth names. There are ways to short. Unfortunately, that means shorting a Tesla. The answer is that shorting a Tesla is a one thing. Shorting, of course, some ARK names if they go up. That means that your Unity and Roblox, no matter how much we love Unity and Roblox, that means that they will be sold. Any rallies would be sold. Palantir, unfortunately, will be sold. I would have thought that Palantir would rally first about 18, 19 before it gets shut down. But a breakdown of Palantir at 16 or 15 would mean a meltdown all the way to about 10. Now, will that happen tonight? Of course not. You don't fall 50% in a single day. But that means for the next 6 months, your ARK can go from 85 to about 40 or 60. You have to open that mind na, oh my God, like C Limited, is it going to fall to about $150? There is a chance. There's probably, I don't know, like 95% chance for that to happen. So this ExxonMobil, you could see that if you invested in ExxonMobil 10 years ago, you are just actually still down. If you thought that you would be up, no. For the last 10 years, owning dirty oil companies in a world that's transitioning to electric is actually still a bad investment. Nonetheless, what people are doing is what we call the mean reversion. So fundamentally, what's only happening for ExxonMobil here is that they just give dividends. That's about it. So we are seeing that continuous run up, from about $60, it rises to $70. ExxonMobil is up 13% for the year, vastly a huge outperformance. Sometimes all that ExxonMobil has to do is just pay dividends. I'm not thinking that ExxonMobil can go 80 or 90, but even if so, I wouldn't chase here. $70 seems to be the prior resistance, but people are going to try to break this $70 to hit it all as high as $80. So at $80, it's actually not already a good yield. So between Chevron, ExxonMobil, I'd say I'm still a believer of HBO Max. AT&T tayo, simply because 5G is a stronger secular trend. But I'll also say that if ExxonMobil does go 65, let's say midpoint, if ExxonMobil is 65 or 60, yes, I am of the view that ExxonMobil is going to get bought. So what I think is energy, what I'll do with energy is if there's a weakness, I'll buy them on weakness. If there's no weakness, doesn't matter, I won't chase. In terms of weakness, as I said, I'd rather have Visa, MasterCard. It is also a dividend name. I could just own Kraft Heinz for all I care. I could just own Campbell's Soup for all I care. There's always other dividends that I could have. I could even own Starbucks if it falls 10, 20% this year, or Netflix and FANGs and the likes. I'd like to own Microsoft if it goes 20% down this year. So just a few things on the energy names. This is not part of the XLE fund, but obviously with energy momentum sky high, you're seeing small caps and the energy names go up. So from about $2, $3 here, you can see that this went 5x, Earthstone Energy, 3 to 5x, $3 to about $15. Could it go as high as $20, $30? As long as momentum continues unabated for energy, we do believe that momentum will continue to buy all these energy stocks, irregardless of, again, sometimes momentum doesn't really care about fundamentals. If they want to buy energy, they'll just buy energy. If they want to short ARK, they'll just short ARK. So you have to remember that. It means that not everyone shorting Square is really correct. Fundamentally, they're not thinking about that. All they're saying is that, because there's a money flow redemption on ARK, then I should just short all the ARK names. So sometimes it's just like that. That's true. It's just liquidation, redemptions, and the likes. This Oceaneering is going from about $3 to about $13. This came from 2020 lows of about $2. We do think that Oceaneering International, these are oil and gas drill companies, can it go higher because the momentum on energy names are higher? The argument is that any pullbacks are still a buying signal. That means Oceaneering at $10 was actually supported. It goes 12, 13, 14, 15. I don't know if it's going to 10x from its lows. Like this was $2. If it 10x's from its lows, that's a $20 reward. So either way, you have to be aware that it came from $2 and $3. PetroChina has been on an uptrend. If everyone is in love with ExxonMobil and Chevron, obviously, who is the largest oil in China? That's PetroChina. So PetroChina is actually rallying. You can see higher lows here very clearly: $2.50, $3, $3.50. The next is 4. Any dips have been bought, pullbacks buy, textbook buy. So these are all charts that you can clearly see. This is a rotation all the way to Chinese, even Chinese stocks, as long as they are oil stocks, have a buying signal. Kasi you might think, nako, aren't Chinese stocks bad? Not true. If it was a Chinese oil stock, there was a buying zone. Now, this is London, British Petroleum, London's largest. Actually, Royal Dutch Shell and British Petroleum are getting all the love as well. You can clearly see this was a healthy pullback, October, November, December. 3 months of pullbacks from about $30 to 27. We did break that $30. Seeing that signal, that means that all the pullbacks are just really getting bought. Actually, for the last 2 weeks, it's January 14. So you're seeing the first 2 weeks of the year, money just kept on rotating to energy names. It seems as if like 2022, you can clearly see in just 2 weeks time, just 2 weeks, yes, 20% sell-offs on ARK, 20% upticks on British Petroleum. So very clearly, it's like there's 40% growth outperformance simply because selling this, buying this, selling this, buying this, selling this, buying this. Clearly, it's a switch move. We're clearly seeing a switch move here. As far as I know that there's a huge switch on dividends. So China Mobile is also part of our top picks in 2022. You're seeing huge moves there. $50 nowadays, 51. So it's just been up for 2022 for dividend names. So I also tried to park on China Mobile, and I'm still holding it because I think that, well, China Mobile gives you about $3 every year. So if I just stay stuck with China Mobile all year long, and if it's true that ARK names would fall 30-40% further this year, then, if you have $100,000, you keep your China Mobile at $100,000, probably gives you $5,000. And then let's see within either half year or end of the year, if Bitcoin is $30,000, if Tesla's like $600, if Square's like $100, if C Limited happens to be $100, if ARK's like $50, like I think like, okay, either you're happy or you're not, but I think that's a Christmas shopping list for you. So I do think that there's a ton of volatility in the market. You might not get as low as I said. It could actually just be 20% lower, but eyes on the prize, still look at the markets because the market's haywire, but obviously there are tons of movement here. So AT&T, this is what's happened. You can clearly see from 24 to about 27. That 10% move on AT&T is brought about by safe haven risk aversion moves. As I said, a lot of money is flowing into divvies, and AT&T is HBO Max dividends. So actually, they're going into AT&T and Verizon. AT&T and Verizon is getting the love, but between AT&T and Verizon, I just prefer getting AT&T. Nonetheless, I'm not bearish on Verizon. Obviously, you can own Verizon as well. VZ, you can see VZ is this is 2022 from about $50 to about 55. Clearly, we are seeing a lot of buyers as well on Verizon here. So in fact, this year it could be the year of the telecoms of the USA. Ta-da! So like actually it's just the year of the dividends, the boring companies, dividends. So that's really the year. 2022 is just a year of divi. Okay, so divi, puro dividend. Okay, so AT&T, Verizon, Campbell Soup, clearly you can see 42 to 46, 10% move just in the first 2 weeks. So you're clearly seeing that path, no? Very clear yan. 42, there might be resistance at 50. Obviously, when it's a dividend name, it's usually capped 20 to 30%. Although minsan, the market's so haywire, the market is so ballistic that they could pay about, for all you know, they'll pay 50 times multiple on a Campbell Soup. I don't know, like they'll pay like 50%. You never know when the markets are going haywire. So from $40 it's going to be $60 for Campbell Soup. But yeah, that's what's happening. This year is all about the canned goods, the telecoms, those types. And of course, since there are some obvious overvaluations here, it's also very clear that you should short them. Lucid is a short, 60, 50, $40. Is it going to go 30 and 20? The answer we believe is 99% confidence, a yes. Lucid is a short. Rivian is a short. Rivian didn't even the production electric vehicles of Rivian delivery was like 1,000 vehicles. Even at $80, my God, it's still a short. It can go to about 60 and 40 and 30 and 20. I mean, I'm so bearish on Rivian. But if you look at the numbers, there is no numbers to speak of. So yeah, so that's it for the day. It's 6:15. Be careful in the market. Still, you have to be very careful because this market is treacherous. 2022 is bearish. So that's it. See you again and have a good night. Bye bye. Have a good weekend. Blah blah.